Good afternoon in Brazil, good evening in Europe. So it's a pleasure to be here. Just to briefly introduce myself like Frederico did. So I've been working for the firm here for the bank for 14 years, following closely the transformation of the financial sector. Naturally, I started covering the traditional banks, but we've seen a lot of changes. Right now, I've been covering mostly fintechs, and digital banks as well in Latin America. And I'm very happy to be here with you all. So just to start the conversation, it would be great if you can briefly just explain who you are and what you do and why you are special, let's say this way. But maybe if we can start with Tinkoff, it would be great, and then we can go to UK.
Sure. Thanks a lot for inviting us. So my name is Neri Talardo. I'm the Vice President and Head of Strategy for Tinkoff, so I'm dialing in from Moscow. For those that don't know Tinkoff all that well, we are a Russia-based financial and lifestyle services provider. We've got over 15 million customers, retail customers. That makes us the third largest bank in the country and the first non-state bank in the country. We started in 2006 as a credit card monoliner, but since then have evolved into much, much more than that, because we offer to our retail customers all sorts of lending products, which we do through our own balance sheet. We offer a number of transactional products. So we have the largest retail brokerage platform in the country with over 1.5 million active customers. We have a current account product that is a key acquisition channel for us. And we've also got several B2B businesses, including an SME business with over 500,000 customers, and we're the second largest internet acquirer in the country. We've gone beyond financial services, so we offer through our super app a number of partner products, from ticketing to e-commerce to all sorts of other things that we'll discuss later today, I'm sure. And I think what makes us special is that in spite of this exponential growth that we've shown over the years, we've been profitable and very profitable throughout. So our ROEs have been north of 40% for the last 10 years, in spite of all the crises that have been thrown at us in Russia over the years, including COVID, including the Russia crisis in 2014 and 15. So we're very proud of the fact that we've been able to merge growth and profitability.
Oh, great. No, quite impressive. Can we please move to Nick, if you can explain a little bit more about what Clearbank does in UK, and if you have plans as well to move to other markets as well.
Yeah, hi. Good afternoon, everybody. I'm talking to you from Jersey in the Channel Islands, which is a small rock between England and France, where we invented e-commerce back in 1994, which led to the creation of WorldPay. In 2014, I was having a conversation with Mary Stark, who was the interim UK payment service regulator, and suggested to her that we probably should set up a new bank in the UK, a new clearing bank with new modern technology and all the rest of it. I felt that the chances of doing that were quite slim, because I was certain that there were regulatory or political reasons why it hadn't happened before. Bless her, Mary went away, spoke to the PRA, the Bank of England, HM Treasury and various other people, and came back to me 3 weeks later and said, look, you can get on and build this bank. And at the end of 2014, after we'd spent some time talking to the FCA, we had a great meeting in Threadneedle Street to talk about what Clearbank was going to do. And I was explaining to the learned people from the Bank of England that we were going to build this bank in a cloud. And at that moment, they all looked out of the window because they thought it was literally going to be floating past them. And I then started to explain what cloud computing was and how by using modern technology, we could create APIs for instant connections and all the rest of it. And so we moved forward and created Clearbank, got authorized at the end of 2016, started to move forward to onboard customers. And our rationale was very, very simple. We wanted to be one of the most secure banks in the UK. We can repay today all of our depositors on demand, so very similar to a central bank. but we also wanted to create competition and opportunity in the marketplace. And to a degree, I think we've achieved that. And certainly Oliver, who's one of our great customers, has demonstrated that what we created, he's then been able to take and build a very, very significant business-to-business service within the United Kingdom.
Oh, great. Yeah, so if we can move to Tide, because as far as I understand, you are also partners. If you can explain a little bit what you do, and then we can move to other subjects.
Great. So thank you for having me. Very pleased. And let me start maybe by just giving you an overview of what Tide is. So Tide is a business financial platform. So we only focus on SMEs. But a bit like Neri was saying, they had moved on beyond financial services. That's always where Tide started, right? So we actually started by saying, look, what is the fundamental problem that an SME faces in the finance and admin space, right? And the main thing is it's sort of the mug at the bottom of your cup, right? I mean, it's like the thing you don't want to do. You want to have the coffee on top, and you just have to do your finance and admin. It's part of being in a business. You need to write invoices. You need to do your payments. You need to do, your expenses. You need to do your payments, and so. What we realized is there's a lot of time wastage, by entrepreneurs that get stuck with finance and admin. And there's a real opportunity to solve that. So when Tide started off, we said, look, we are setting out to basically save entrepreneurs time and in brackets money. And I say entrepreneurs because in the UK, and I'm pretty sure that's very similar in other markets, the very vast majority of SMEs are of the very small type. They're really micro SMEs. They're 1, 2, 3 people. In the UK, depending on which metric you use, it's something like 96% of businesses are micro businesses. And so we're really there to save them time. We are one platform. And what we do is we offer anything around finance and admin. So it's not only traditional banking, but it's also other financial services and also financial administration. So payroll, expense management, invoicing, because we realized that to save people money, entrepreneurs, all of these things need to work seamlessly together. So, you write an invoice, you need to chase the invoice, you may want to factor the invoice. Then when the money comes in, you want to attach the payment, the invoice to the payment coming. You need to push all of that into your accounting system. So these workflows, these connectivity chains cut across finance and admin product verticals. And we solve for that, right? You can do all of that very seamlessly. And because that's quite a large remit, right? And maybe with the exception of Tinkoff, who've been able to grow exponentially at very, very large scale. For us, the problem would have been, we tried to manufacture all of that. It would have been a huge distraction of our resources. So we said we are in SME only, we solve for all of finance and admin, but we don't necessarily manufacture the products. And this is, for example, where our partnership with Nick and ClearBank comes in. So the Tide Current Account that is one of the key products on the platform is essentially if you want a product that we deeply embed in the platform, we take the proposition responsibility, but the manufacturing responsibility, doing this at scale with modern technology, making it available through APIs, that's where ClearBank comes in. And that allows us to really focus on the proposition layer, the platform layer, to be successful. And as Nick was saying, our partnership has been very, very successful in this. So in the UK, Tide serves around nearly 6% of all SMEs, do their banking through Tide. So that's almost 350,000. We're growing extremely rapidly by just relentlessly focusing on, solving this time and money problem, but mainly time problem SMEs have in their finance and admin. So people can just really get on with what they love to do, but just running their business, which at least maybe I'm sure there's the odd accountant that went into business to do, to do finance and so on. But most entrepreneurs clearly went into business to actually build their restaurant, do their IT consultancy and whatever else they set out to do. And so that's what Tide is about. So very pleased to be here and to have this conversation.
No, great. Just going back to Neri, right? He talked about super app, right? And until very recently, this word was quite uncommon here in the West, right? Everybody knows, about the super apps in China. You do have, Kakao in South Korea as well. You do have in Asia is a little bit more common. But then I think in Russia, you have Tinkoff, really becoming like a super app. And Tide, the way I see, at the end of the day, could become some sort of a super app, for SMEs as well, right? Becoming a complete marketplace, right? So, how do you see, right, these evolvement, of super apps in the West? Do you think it's possible? Now we have PayPal talking more about that, So maybe Nery, if you can help us understand, what do you think is important, if you want to build a super app, right? We know that Tinkoff is very relevant in Russia. You still have a lot of room to grow in Russia, but you're also thinking about going to other markets. So if you can help us understand, and then we move to our other friends here.
Yeah, lots to unpack there. Well, look, I think firstly, let's define what we see as a super app. So for us, a super app has to be an umbrella app that has lots of traffic in it. So there has to be some kind of basic service that already is included in the app that drives lots of traffic. And for us, that's the banking bit and the ability to do all your financial transactions from the app. But then if you want to really call it a super app, you need to have the payment capability, so that anything that you want to acquire, buy, or do in the app is done very seamlessly and all is integrated. You need to have some kind of marketplace, and there's various options as to how you do it. But if you want to have a super app, needs to allow the customer to do purchases and buy services that are beyond your traditional banking remit. And then the way we see the super app as well is that it needs to include content. So it needs to drive engagement. It needs to get the customer to want to open that app. And the way we drive that is by actually producing our own content and driving interesting information, educational information to our customers, so that whenever they open the app, they don't just see their balance and do a few transfers, but they might learn something new, or we might encourage them to do some certain actions that might be beneficial for their savings or for their spending or whatever it might be. And look, I think the jury's out as to whether the West will go down the super app route. I think we will not be seeing super apps like we have in China. I don't think we will see super apps like that in Russia either. And I think it's partly a cultural issue where there's different levels of trust and different levels of willingness to trust one company with all your data. And on the other hand, it's a question of leapfrogging. So, we're all used to in Europe and in the West of having Facebook as our social media platform, Google as our search, Amazon as our e-commerce, et cetera, et cetera. And we're kind of wired up to be used to using all these different services. If you go to the East, a lot of these services happened much more closely together, and some companies managed to basically build them out all at once and include them all in one bundle, if you want, or in one super app. And that's what effectively led them to leapfrog all these individual businesses that were built in the West. And that's why I don't necessarily think that the West is going to go down the super app road.
No, perfect. Going back to Oliver, is it because you mentioned that, look, you want to solve, the issues of the SMEs, right, and pretty much allow them to do their thing, and you can help them, to pay bills, to pay employees, to help them with their day-to-day, kind of problems. So maybe super app is not the best word, but maybe naturally you are a platform, right? So how do you see? How do you see your platform evolving? What else do you think is important, for you to address? For instance, here in Brazil, and I think in Russia as well, there's a lot of demand for credit, right? This is the number one product, right? Naturally, I think in UK and maybe in other developed countries, maybe credit is not the number one issue. So if you can help us understand, what are the main needs, that our clients have, and how can you help them?
Yeah. So again, let me sort of look at it and put it from an SME perspective. So the first thing to realize is that SME is a very, very heterogeneous sector, right? They have very, very different needs once you go outside finance and admin, right? So if I'm a restaurateur, I need to buy my food, I need to, maybe, you need certain equipment, right? And the thing. So it gets very, if I'm an IT consultant, I'm in a completely different category. I need to find new clients, etc. So it's a very, very heterogeneous world. So when we talk about the business financial platform, and remember, we are talking not super app, and I understand Neri has business customers, but we really, we really don't do consumers. We're really on the SME side. So we limit ourselves to finance and admin because we think beyond finance and admin. We call this sometimes internally the financial operating system, above it the application layer. So once you're on the application layer, so how am I a good restaurant? How am I a good IT consultant? It gets very, very industry specific. And, there are specialist solutions and a bit, I would argue, there are probably other providers out there. Now, on finance and admin, the thing to solve is that all of these things work together seamlessly. So when we talk about a bill pay or sending an invoice or something like that, or credit, we really see not this as a standalone product. We see it working seamlessly together. And our strategy really is, and this is where maybe you have some elements of super app or not. Maybe I know Nick is a very strong advocate of open finance, which maybe we can come to. We strongly believe in that. So we really believe in these flows, people should have product choice. So let me give you a good example. So we are launching a product called Tide Accounting, which is an accountancy software. And now you can argue, well, Oliver, you already have partner labels on there, right? So you have, Sage, Xero, great accounting tools. The reason why we're launching our own is that for 2/3, these other ones are too complicated, right? And so the Tide Accounting one, again, white labeled, we just announced it with, Sage will white label that for us. Effectively, we will deeply embed that in our process. It's almost the default, right, accounting solution. However, we will never go to very, very sophisticated needs. So if you need to do consolidation accounting, right, multi-GAAP, multi-currency, what you will do is a Sage or a Xero or, Intuit. These are much better sorted. And so we allow them to be hooked into the app, right? So you can either have a Tide label product or you can have a partner label product. And where we see things evolving is then, for certain of these products, you also need your professional advisor. So we've announced that we will actually also offer a service. We can find your accountant on Tide. So when we talk about where's the app develop, what's the direction of travel, it's really about becoming this comprehensive business financial platform that ultimately, solves all the finance and admin needs of an SME. But we don't really see that, and we will in that offer product choice. Right, so own label, partner labels, etc. But what we will not really plan to do is to offer services that are outside the finance and admin space. Because just think for SMEs, this is just they are specialists because of the heterogeneity. They're specialist providers, that focus on specific sectors that are more suited for them.
No, perfect. Thank you very much. Nick, what about you? What do you think? Even though, as far as I understand, you are not dealing with the consumer or the SME directly, you are helping, right, with your technology. You are being the backbone, of all these players, which are dealing at the end of the day with the SMEs, corporates, and consumers, right? So, what do you think about the role of super apps, and maybe UK against other markets, what are the differences? If you can help us understand a little bit your thoughts here.
Okay, I think that that super apps run in parallel with market change, and the super app might start first and market change might start first. Let me illustrate that. If you look back to M-Pesa, which is regarded as one of the most significant transformations in mobile payments in Kenya, that worked because of the geographical and the infrastructural requirements of the country. And then if you look across to China to see the major, super app developments there, that worked largely because of cultural change, cultural requirements, and the organization of the country. When you come back to Europe, you look at that and you say, well, do we have any really big super apps? And the answer is probably not, and not yet, and may never. But we've gone at it that another way. We've had that the market has been changing since 2009 in relation to the European Union and various other groups encouraging open market and open competition. And originally that sort of presented itself as this concept of open banking. And effectively what we were saying, or what was being said, was we want to open banks up, create competition, allow innovation, and allow change. And Clearbank was sort of partly responsible, I guess, for working in that area. But it's quite funny because I was at the launch of the Nesta competition in the UK, where we went out to try and get somebody to build a UK super app. We offered £1.5 million worth of prize money. And before we actually did the announcement that we were going to do this, somebody said to us, is open banking about the banks opening on a Saturday morning? Because that would be really great. And ironically, the super app that they were expecting for us to deliver in the UK was a physical access to branch, which had been taken away from them many, many years ago. So sometimes I think the way that this all gets put together is quite interesting and based upon different economies and different technologies. And of course, as Oliver's just said, we've now moved into the whole world of open finance, which I think is a far better phrase than open banking, because it's really starting to describe what we are trying to achieve, both as an industry and to encourage entrepreneurs to develop new applications and new solutions. And I think that we were on the cusp of some quite profound changes that I think were going to occur, up until 2030 perhaps, when we're all looking into our crystal balls. But I think the impact of the COVID pandemic has effectively shifted that innovation and that demand for digital satisfaction of financial services products. Because everybody in the world over the last 12 to 18 months has gone through a digital learning experience like no other in relation to how they communicate with people, with friends, with businesses. You can't travel. You have to use the technology that we're using today for this conference. And I think a lot of change is going to come out. And perhaps the super app is people being able to talk again and communicate without actually physically meeting each other. And I think the next, few years, there's going to be massive innovational change in financial services, where as an industry, if we're honest about ourselves, we are still just playing catch up.
No, great. And let me try to still maybe in the same topic here, but try to understand, what's important to have, at home and what you can use, from third parties, right? I just try to understand here because Tinkoff, for instance, you are the underwriters of your own credits, of your own credit cards, but you also distribute, some products, of third parties, right? So you do have, third parties, selling goods in your app. How to balance that? What do I need to do at home? Right, 100%, maybe onboarding of clients, I don't know, or what can I, use a third party, or eventually what can I sell, from a third party in my app? I think this would be a subject that it would be very interesting to hear about Tide, how Tide thinks about it as well.
Look, so at the core, we are a financial services provider. So basically everything that is financial services related, we do ourselves. We realized pretty early on that if you want a business in financial services that generates decent returns, good returns, and returns above the cost of capital, doing lending through your own balance sheet is a great way to do that. It's very difficult. It's a lot more difficult than it sounds, I would say. But that's where a lot of the monetization happens for us. So we've tried to distribute other financial services through our platforms and through our app, and partly because of the structure of the market, but also partly because we are just better at doing it ourselves. We've just always steered towards doing financial services ourselves, and because we've got the right skill set to do it. When it comes to products that instead are more about engagement, so making sure the customer stays with us for longer and enjoys their relationship with Tinkoff, that's where partnership and third-party products have more prominence. So a lot of the services that are integrated into our super app, so if you want to book a hair appointment, obviously we don't have our own chain of hairdressers. If you want to book a restaurant table, we don't have our own restaurants aggregator. But these are all services that make the experience of working with Tinkoff a lot more pleasant, associate Tinkoff with a lot of positive emotions, and so we're very happy to partner. And then all the more happy to partner if it's a brand or a service that people recognize and that associate with us, and it makes us look good. So when it comes to engagement of our customers, we like to partner, and it's also a very capital light way of doing this, because if you were to build out all these services yourself, then you would require a lot of capital and possibly have to weather a lot of losses for a lot of years. When it comes to financial services and monetizing, we realize that we need to do it ourselves.
Oliver, if you can add on that subject as well.
Yeah, so I think from our experience, and clearly in part it's supply driven, right? What actually does the market actually offer that you can leverage? But when we look at the thing is, we would not look at it as, as binary, right? You do it yourself or you have someone else do it. So when we talk about what we call the tight label product range. So this is, for example, where Nick and us, work together on the business current account. We call that, right, in category, we call this a tight label, right? So if you think about it, it's a bit like the iPhone manufacturer, it's designed by Apple, right, but not manufactured. That's the way it is. So, we, for a tight label or the tight accounting, we really are responsible for, getting a buy-in price. We set the retail price. We do what is the differentiating proposition, right, around it. However, we rely on an expert partner that has the deep expertise and the scale, right? So, for example, looking at, Nick, I hope you will agree, looking at ClearBank, right, for us, having a modern clearing bank that has just tons of scale going through its systems in terms of, will just drive down the marginal cost much more than, we could ever do it, ourselves. Plus, there is a specific expertise, right, to integrate, if you just pick a random one, faster payments, that is real deep expertise, but it's not necessarily from a consumer differentiating, right? And so we really, with a tight label, we think of this like the example of an iPhone. So designed by Tide, manufactured, by ClearBank. We then have partner labels, which is really where and basically a tight label, although legally it may not be a tight product, the customer will really hold Tide responsible. Right, you've designed the account. You provide the service. We provide the service center, all of that around. We then have partner label products on the platform. So I was saying, we have other accounting softwares on there, and there, the customer recognizes that it is actually a true third-party product. They hold the other party responsible for the design and functioning of it. And with what Nero was saying, for us then, for a partner label, it's really about convenience, right? How to make that work seamlessly in the app. So we see these two layers. So tight label, partner label. So partner label is completely from a third party. Tight label is designed by, but manufactured by a third party. We very rarely on deep products decide to fully manufacture. So this, for example, invoicing, tight invoicing, that's a good example, because honestly, the manufacturing is not that difficult and not that scale dependent. Right? So generally, that's how we think about it. We want to own the platform, do that, all of that technology, the differentiation, that's what we focus on. The deep manufacturing, in general, we shy away from for capital intensity purposes and etc. Now, I want to make one point that I think is very important to understand the point of credit, and maybe I can just zoom into that. So in credit, there are clearly, and I'm talking not consumer, I'm talking business. In credit, very roughly, the world in the UK and probably most of at least Western Europe, the way it looks is 1/3 of SMEs don't need any credit. 1/3 want credit, but inherently uncredit unworthy. And there's a third that needs credit and is credit worthy, right? So good example is an IT consultant in the UK, Nick, I'm sure you will agree, that is a self-employed, they get paid a fortune, they have enormous balances, they will never take a loan. So, you have these things, and for that, what we've decided in credit, while we see the advantages of the balance sheet, the reason why we shied away from it had to do with that in SME, these credit needs, again, very, very diverse. So where in consumer, you have a couple of main categories, credit cards, term loan, maybe a mortgage. it's much, much more diverse in product offering on SMEs. You have factoring, export finance, right? Invoice finance, supply side finance, supply finance. You have corporate credit cards. I mean, you probably have 15 or so reasonably running credit categories, all of them needing deep and differentiating expertise. And so what we've decided on the partner label is actually in the UK to actually work with partners that are specialists in these specific credit segments. That may be very specific to SMEs, may not really apply so much for consumer, but that's why also in credit we've decided to maintain that model.
Thanks. Nick, what about you? Because today I think it's a little bit easier because you are well known, you have a lot of good clients. But in the beginning, when you started, right, and you needed to get clients, right, and to convince, that look, you can't do everything, I can do better, I can do it in a different way. What was the pitch, to sell, ClearBank, to the clients, and how it changed over time?
I think the initial approach was nobody believed we're actually ever going to do this because of the market challenge. Bringing up a prudentially regulated bank is something that I would now have nightmares about. At the time when I was doing it, it was really exciting and all the rest of it. But it's honestly not that easy. And the level of governance and oversight and all the other things which you need when you're handling billions of pounds of clients' money, is really, really important. I think the vision that we had when we created ClearBank was that we really wanted to lead in relation to the delivery of efficient technology. If you look at the UK marketplace, for example, there is something called financial friction, which is a B of mine, which is the amount of inefficiency that financial services organizations create that costs their company money. And globally, we have another project with the World Bank and the IMF at the moment outside of ClearBank. And we estimated about 18 months ago that the financial friction costs that our industry delivers to our customers is about $15 trillion a year. Now, that is cash flow costs, and that is ridiculous that we should be slowing down payments to our customers, slowing down loan applications, shutting up the weekends, doing everything possible to preserve a culture that was created for a market that now doesn't exist. So we're sort of very, very passionate about trying to change that. And I have a non-executive role. I'm the non-exec chairman of a business called Funding Options. And Funding Options is a bit like ClearBank for lending. And we basically aggregate a range of different, about 163 lenders in the UK. We don't take any balance sheet risk or anything like that. And we've recently launched a thing called the Funding Cloud, which is delivering instantaneous credit decisioning and lending to SME customers throughout the UK. And we've managed to move from a human resource capability of about 8% rapid conversion to a technology using AI of achieving 14% conversion. And this technology has only been live for the last 2 to 3 months. So again, I think that by bolting in solutions that deliver, what we believe is good customer service, and if you listen to what Neri and Oliver are talking about, that's where they are. They are really focused in on the customers and delivering strong customer service. And I think sitting behind them, there's ClearBank and obviously other organizations around the world who are dealing with what we call in the UK, the plumbing, the pipes that allow all of the money to move around. And the reality with the pipes is that we need to supercharge those pipes, supercharge the efficiency, and basically develop an industry that's fit for purpose for a digital world, where effectively, we have real-time payments running through, we have international payments running through, in 300 milliseconds, not in 3 days.
Thanks. So going back to Neri, you mentioned about credit and the importance, to have, to be a good underwriter, to have decent ROEs. In your case, to have great ROEs, right? And I think I we were reading more about Tinkoff, and we joined the Investor Day, which was great, by the way. And you mentioned that you had interest to eventually go outside Russia, maybe not to US, maybe not to Western Europe, but to other markets, right? So if you can help us understand, where can you go? And if you are looking for places, eventually where you can do similar things like you do in Russia, right? Places where there's a big demand for credit, maybe still kind of a high spreads. Actually, I think I'm thinking about Brazil, right? So if you can help us understand, what are the markets that you might be looking for?
Sure. I'm going to have to disappoint you, and in that I'm not going to be able to tell you which country it is that we're considering. Also because it's still in the process of being evaluated. But look, we've built something quite neat in Russia, and we think now we've got the bandwidth and the experience to try and perhaps recreate that outside of Russia. If we decide to go ahead and do it. It won't be we'll do it only if it's not a distraction to what we want to achieve in the Russian business, which is still a lot that we need to do. And at the same time, it would be in a place that would be worth it. So a sizable market that is underpenetrated, yet with a decent level of infrastructure that would enable us to, again, recreate something similar to what we have done in Russia, obviously with all the local and cultural nuances that are involved when you take a banking business abroad. That narrows somewhat what the options are. I can safely say it's not Brazil, so no worries to anyone in the audience from Brazil. But it will definitely be a country where we don't necessarily have to reinvent the wheel in terms of business model, because we do think we've got a good formula that we can apply. So when we think about where and this is kind of saying what we've already said during the strategy day, we'd like to go in with some kind of banking license, which we think gives us the flexibility to change the business model, to change the funding structure, to launch several products, and therefore to adjust to the market, which actually limits somewhat even more where we could go, because not every country is willing to give out banking licenses. And we'd like to go most likely with a credit product that would enable us to get it to break even relatively quickly. Again, similarly to what we did in Russia when we started with credit cards, and that got us to break even within 18 months. But again, we also have lots of other options in terms of acquisition, where we can take what we've done in Russia, which is our current account, which is run on a break-even level, an incredibly rich product with lots of perks, benefits for our customers that brings in millions of customers every year. But also we've got a great brokerage business, which is both an acquisition and a monetization channel for us. So that's also an option for something that we might utilize when we think about international expansion. But I'll probably leave it there.
No, great. No, thank you very much. Yeah, Brazil's too crowded, I think. But
lots of good players in Brazil.
Yeah.
We speak to I'm sure a lot of people in the audience. We speak to Brazilian companies relatively regularly, and so we like what's happening there on the ground.
No, exactly, and actually this is a good. Maybe we can talk about that, because Brazil clearly is a big market, right? And the regulator has been helping, right? Naturally, you do have a lot of very good entrepreneurs. Interest rates, they are low when compared to the past. Changes in technology have been allowing, for new players to be successful. But you also have a very pro-market kind of a central bank. So I want to understand your thoughts about that, right? About the importance of having, a regulator that is pro-business and pro-competition. We know that in UK, I think Tide and Clearbank are actually young companies, right? So of course you've been around for a longer period of time, right? But your companies are younger, right? And so getting. Maybe if we can go to Oliver, if you can help us understand a little bit, what's the importance as well about having the regulator stimulating competition, not necessarily helping one or the other one. It's not about that, but allowing, reducing barriers to entry. Right? Of course, you have these discussions about asymmetry, right? But I think in the beginning, you need to create some sort of asymmetry. Otherwise, you have no innovation, right? So if you can help us understand about what's happening in UK, and maybe then after you two, we can go back to Neri to see, how he's seeing the evolution in Russia as well.
Yeah, so I think from the UK, my reading of it sort of goes in waves in the UK, right? I mean, there was an early part of the UK which sort of was the many ways, right? Open banking, the whole sandbox regulate. These were UK concepts, and there was a time when the FCA and to the extent the PRA were, very open to that. I think then we had a time where, frankly, people sort of maybe rested a little bit on the laurels, right? And, it's really, really honest, not that much has happened. I mean, people took up the baton, right? I mean, people like Nick and, Yukaka to Tide, frankly, Bonzo and, Starling and others sort of took up the baton and then ran with it. And so it was more industry-led. And I think now there is a debate in the UK. There's a very good report by Ron Khalifa, ex-World Pay, to another business that Nick founded, a CEO that sort of now retired, who has done a report to actually help the government and the regulators to really say where do they need to do. So I think internationally there is this thing that the UK has always been at the forefront of regulatory innovation. I think that's only partially true. It comes in waves, and maybe it has to come in waves, right? You do something, you see what happens, and then you go to the next one. But I think the UK is really desperately crying for, the next wave of sort of regulatory moves, and we haven't quite seen them yet. The UK is also faced with a situation that post-Brexit, right? We're all waiting for the Brexit dividends that are set to come. And so, I think there is an additional sort of impetus from that one to see change. But, I would not characterize the UK as one that has been consistently at the forefront of that. There have been waves. Nick, I'm not sure whether you have anything to add to that, but I think that's what I would see. It's not, it's not been consistent really in that sense.
Yeah. No, I think that's fair, Oliver. It's been a bit up and down, but interesting. I've also talked to the regulators in Brazil, where they have been looking to copy and follow many of the things that we effectively, or the PRA and the FCA, pioneered in the UK. And I think that there is now a global understanding that the regulators need to get better up to speed with what's going on. And there's a global network called GFIN, which is it's the innovation network for regulators, believe it or not, which they put together to try and share ideas, act as a global sandbox, and move different projects forward. And I think that's really useful because it's starting to recognize that whilst there might be domestic needs, there's quite often international requirements to change those processes. And I think that the big thing that's sort of leading the change of this is the way that cloud computing has changed the marketplace, where you can now plug into an international network very, very quickly. We have another business called RTGS Global. We can enable a bank onto our network in 30 minutes to do effectively international LVL transactions. And we're looking to link that back into CBDC to remove credit risk. 2 years ago, we couldn't do that. 2 years ago, the technology to allow us to move $1 trillion from the New York Fed down to Australia in 300 milliseconds didn't exist. We dreamed it would exist, but it's now there. And I think the key point I'm trying to make is that the technology that we now need to deliver the next real jump in digital innovation exists. The regulators globally are now talking to each other in a way that they've never done previously, which is all positive. So I think wherever innovation comes from, be that the UK, be that from Russia, or be that from the South American continent, because you're as capable of doing this as we are. I think now is the time to embrace those opportunities and start to move the market forward.
No, great. And what about Russia? how do you think, regulation is evolving? What do you think it would be good to have, for us to see, faster growth? As far as we understand, and in Brazil it happens as well. You still have, the need, to have some physical presence as well, right? So if you can help us understand a little bit, how do you think, Tinkoff can help as well, the regulator, to move forward, because my understanding is that market players, they need to help a little bit as well, explain the pains, explain the benefits, and this helps, everybody to move in the right direction. So if you can help us understand, how is this evolution in Russia going on?
Sure. So Russia has a very proactive regulator, which is the central bank, and arguably the central bank is one of the most disruptive players in the markets. So already now 3 years ago, I think, they launched an instant payment system that works instantaneously through phone numbers. I think in Brazil, you now have something similar in the form of Pix. And that's already taken the P2P market by storm. And now they're taking it to the next level where they want to tackle the C2B market as well, using QR codes and trying to reduce the acquiring fees effectively that a lot of merchants incur, with the ultimate goal of getting a lot of businesses to stop using cash and moving first to card and then eventually online. So in these conversations, we're obviously very involved because we're the leading fintech in the country. So the central bank is very keen on hearing from all the various players. They're very keen on fostering competition, because in some parts of the markets, in the financial markets, the services are relatively concentrated. We've got several large state banks, and so the regulator is also trying to tackle that. But it's a very constructive dialogue. So we appreciate a lot what they're doing, and they're really helping the financial services sector move in the right direction. They're also starting to look outside of financial services, and I think this is something that a lot of other regulators will get to eventually, because as the borders between what is a financial services player and what is a marketplace and what is a tech company, they're starting to blur. And you get banks that are offering non-financial services, and you get non-financial services that are offering financial services. And so the central bank wants to have some kind of understanding of what the financial risks are also outside of the financial sector if a lot of companies start offering financial services. And so I think the next step is going to be what they're calling someone like ecosystem regulation, where the playing field is made even across not just financial services, but also other players that, in a lot of other countries, we've seen this kind of regulatory arbitrage of companies and tech companies offering financial services without being really regulated. And I think that's something that the Russian central bank is proactively looking at, and I think something that a lot of other central banks will be looking at in the not so far future.
Thanks. Guys, we have 3 minutes left, so I just want to go maybe to the final subject here. So thank you very much. Maybe just to talk about a little bit about your funding capabilities and maybe way to go to the market. How you are seeing your companies today, right? Tinkoff naturally is listed, right? It has been very successful. The stock has been doing very well, right? What about Tide, right? We know that it's still a private company, right? You have been raising money. If you can, of course, what you can say naturally, right? You've been raising money in the private market. Do you still have a plan? Do you need more money in the next 12 months? Do you have a plan to sometime to go to an IPO? Is this important or not? If you can help us understand, and then we can move to Nick.
Yeah, so Tide is effectively structurally profitable, right? So if we invest very heavily in marketing technology, we go negative, but we could actually revert to breaking. So really, the reason I'm saying this is when we actually take a decision to use funds or go into negative, as you put it, it really has to do with we take an investment decision. So, for example, as Nick knows, we are very, very heavily investing in marketing to acquire, and we're clearly moving our technology forward at pace. So that's how we look at it. So to answer your first question is, do we need to fundraise? It's really by choice, right? We don't need to. We do it, we could roll back to no if we didn't want to. But at this stage, the unit economics are very, very encouraging. And so, we want to continue to grow. So that's number one. Number two is, in terms of IPOs and private markets, at least in the UK, we have a very, very deep private market scene, right, from VCs to private equity investors, and often it is a little bit easier for them, right, to understand, business models and to drive things forward than when you are publicly quoted and you're sort of tied to your quarterly report. And so, as far as Tide is concerned, given that we have these opportunities with quite deep private markets, I don't really see in the short run, any need to go to public markets or into IPO, right? So I think that's how we look at it. So we would probably stay private, for a reasonable time to come. How long that is sort of, is a question mark, and really probably the IPO would become a cheaper form of equity if you want, really, but really at the stage when probably the biggest sort of initial growth phase would be behind us. That's at least how I would look at it at the moment.
No, thank you very much, Oliver. What about you, Nick?
Well, I mean, as you know, Clearbank's a private company. When I set it up in 2014, we worked out what we were going to need to take the business through to profitability. And we have very strong supportive shareholders, and we're still on that track. So we haven't gone out to source external funds. I think one of the challenges you have being a prudentially regulated bank, and then I've got to insert the word prudentially regulated tech bank, is that if you IPO and you're mistaken, your values are different to what they should be if you're a tech bank. So I think that we're probably going to sort of, watch how the market goes, continue to innovate, and there are some interesting plans that you'll hear about, I think, during the course of this year, from both Clearbank and some of the other businesses that we're involved in, and we'll see where we go to. But the pain of running a public company and a regulated business at the same moment in time does mean, I think, that my aspirin consumption would increase.
Great. And just to finalize here, going back to Tinkoff, naturally, Tinkoff is well capitalized and very profitable, right? But just want to understand here how you think about it, right? Because we do see other digital banks. We don't have many listed digital banks yet. I think that the number probably is going to increase a lot in the next 12 to 18 months. But the ones in Brazil, they are still raising a lot of money, right? And at very high valuations, naturally. So how do you think about that, right? If you go to other markets, eventually, does it make sense to be listed there eventually as well to raise money in that particular market or not? Or the idea is to be, concentrated in one stock, so if you can just help us understand, about that.
Look, it's definitely way too early to think about whether international expansion. Well, it's early to think about kind of international expansion targets, and it's early to think about what the kind of structure would look like and whether we would need to fundraise and how to fundraise. What I would say again is that we like to fund ourselves. We don't like to rely on external markets too much. We've been around for some time. And we've gotten scars from the 2008-2009 crisis when we were wholesale funded and the wholesale markets dried up. We grew up in Russia where there is no abundance of capital and venture capital, and so we learned very quickly how to self-fund and how to couple growth and funding. And so, to the extent that we can continue to do that, we will. Obviously, sometimes the growth opportunities are so sizable that we might need to come to the market and ask for equity injections, as we did in 2019. We did an SPO of about $300 million. But again, the preference is to try and use internally generated capital. We like that flexibility.
Great, guys. Unfortunately, our time is over. It was a real pleasure to host you. I hope you liked that as well. So let's keep in touch. And once again, in the name of BTG Pactual, thank you so much.
Thank you very much.
Thank you for having us.
Thank you very much.